Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from BGC Group, and let me tell you, it's a bit like watching someone juggle flaming torches while riding a unicycle. They're trying to do a lot at once, and we need to see if it's all going to come crashing down. We are looking at an 8K filing, which is basically a company shouting, hey, look at this, because something important has happened. In this case, BGC Group is telling everyone about a new offering of notes, essentially a way for them to borrow a bunch of money. This report is dated March 26, 2025. This is the date when whatever they're talking about officially happened. The company in question is BGC Group, Inc. They are based in New York. They are listed on the Nasdaq stock market, trading under the ticker symbol BGC. If you want to buy or sell their stock, that's what you need to know. Now let's get to the meat of the matter. The main event here is the pricing of a note offering. What does that mean? Well, BGC is selling bonds which are called notes to investors. These notes are basically IOUs promising to pay back the money with interest. They priced this offering on March 26, 2025, and it's a pretty big deal, $700 million worth of these notes. The interest rate is 6.55%, so whoever buys these notes will get paid that percentage every year until the notes are due. These notes are due in 2030, meaning that's when BGC has to pay back the entire $700 million. These 6.4 beneficate notes aren't being offered to the general public. They're being sold in a private offering, which means only certain qualified investors can buy them. This is why the filing mentions that they won't be registered with the Securities and Exchange Commission, the SEC. So what's BGC going to do with all this money? They plan to use it to pay off some existing debt. Specifically, they're going to pay off $288.2 million of older notes that are due in 2025 and another $11.8 million. These older notes have a lower interest rate, only 4.375%. So in simple terms, they are borrowing money at a slightly higher interest rate to pay off older debt. Anything left over from that they will use for general corporate purposes. The filing also includes a disclaimer, basically saying that this isn't an offer to sell these notes to anyone. It's just an announcement of what they've already done. Finally, there's a section about forward-looking statements. This is legal language that means BGC is warning everyone that things might not go exactly as planned. They're saying, hey, we're making some predictions, but don't hold us to them. They point out that these forward-looking statements involve risks and uncertainties. This is standard stuff for these kinds of reports. They tell you to check their other SEC filings for more details about those risks, like their 10K and 10Q reports. And that's it. Now let's step back and look at the big picture. BGC Group is taking on more debt, and while it sounds scary, companies routinely refinance debt, especially when interest rates shift or older debts mature. What's interesting is the choice to issue new debt at a higher rate to retire old debt maturing in the same year as this announcement. This suggests they may be anticipating a cash flow crunch and prefer to extend their obligations rather than face immediate repayment using current earnings. That's not necessarily bad, but investors should watch how BGC uses its cash flow closely. BGC's management clearly anticipates future growth or improved profitability that will make this new debt manageable. But taking on more debt always carries risk, and investors should pay attention to BGC's upcoming financial results to see if their bets are paying off. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. What company should we decode next? Let us know in the comments.